So on this last bullet point, we're going to be focused on currency pairs, or what pairs you're trading, and how many trades you're going to be taking that day. Right? So for the currency pairs, you want to do your research on this. You want to figure out what currency pair works best for you, depending what trading session you're using, right? If I'm trading in New York session, probably trading USD CAD or Euro USD is best, because it's a US economy, and once the US economy is open, the US dollar gets power and it starts moving the charts. So for me personally, I trade the NASDAQ because I find the NASDAQ is very volatile and price action is super clean. So on the higher time frame, looking at the NASDAQ, or even the lower time frame, I could tell, okay, whether the price is on an uptrend, downtrend, or consolidating, right? Gold, on the other hand, I never really traded gold. I traded other pairs, but with the system that I'm using, with the strategy that I'm using, gold plays out pretty well. Gold is not really, price action is not really as clean as NASDAQ, but it respects its levels, right? Support and resistance. It respects price action, and sometimes gold be cooking. It be running the bag up. So I gotta give it to gold. But my main pair is NASDAQ. NASDAQ is the one I mainly trade, right? So for the next thing, you want to know how many trades are you willing to take that day, right? Me, I have it set up where I'm only willing to take 1 or 2 trades that day, that trading day. If I take 1 trade and I win the first trade, then I get out the charts. I close my computer, continue my day, and do what I was going to do that day, right? Now, if I lose the first trade opportunity that I find when I'm trading on my session, right? I lose that first opportunity, then I have a second opportunity to find another setup and to potentially make my money back or take another loss. And let's say I took another loss, now I have 2 losses for the day, I'm set. I'm closing off my computer and I'm continuing my day, accepting the loss that I took and continuing my day, right? Because if I don't do that, if I violate that rule, then I'm going to start, if I take those 2 losses and I go for a third one, now I'm revenge trading, right? Now I'm trying to make my money back. And that ties into psychology, which we're going to talk about in the 4th stage of the course. And that, now I'm trying to make my money back. Now I'm placing another trade. Now I'm starting to overtrade, right? Or I'm placing another trade, which is overtrading, revenge trading, and I'm putting a high limit, a high risk. So in case that trade does win, I make back my loss plus more. Now I'm over leveraging. Now I'm risking way more than I should. And if that trade loses, now I'm down for the day more than I should have been, just because I wanted to revenge trade or over leverage or not follow this rule, which is why the rules are there. Okay. So also something you want to check out is that the risk management, right? The risk that you have for the day, it ties into how many trade setups you're taking, right? So let's say I take 1 trade setup and I'm risking $5 for the whole day, correct? And I take 1 trade setup, right? I'm risking $5 for the whole day, 5%, and I take 1 trade setup, but I lose. I've only lost 2.5% of my account, right? But if I won, I would have won 5%, or just 2.5% if I would have went for the 1-to-1, right? But if I would have went for the 1-to-2, then I would have made my full 5% on that 1 trade, correct? Now let's say I take that loss and that first trade loses, I'm down 2.5% of my whole account, correct? I'm down $2.50. Now, if I take another trade and that next trade, that second trade that I take, right, that second trade loss, it takes a loss as well, then I'm down $5. I'm down the full 5% of my account. Me taking 2 trades, it doesn't mean that I'm risking 5% on each trade. This is why knowing your risk and how many trades you're taking and your R to R is very important. So this is why it's first. This is why your risk is the first thing that we learned about, right? Because your risk is gonna tie to your risk to reward, and it's gonna tie to how many setups you should be able to take comfortably that day before you reach your max loss limit for the day. It might be a little bit confusing at first, but once you understand it, it's pretty straightforward, pretty simple. But a lot of traders have trouble being disciplined and following these rules while they are inside the trade, right? Or before they enter a trade. So, like I said, these rules are easy. They're pretty simple. They're very black and white, very straightforward. But at the end of the day, once you actually go into the charts, you're going to see how difficult it is to follow these. Just sometimes people are hard-headed and having a hard time listening and following themselves. So that's why we have the rules noted down, or the trading plan noted down, in order for you to follow that and actually see results in this skill set. So your homework is going to be on the trading plan. And it's basically going to be figure out how much you're willing to risk and what risk to reward are you willing to accept from the markets every time that you take a trade, which I will recommend 1-to-1. Once we go to breaking down the strategy, you're going to understand more on the 1-to-1. But you could also do a 1-to-2 risk to reward, which I do both. It just really depends the trade setup and how quick price moves, right? The second question I want you to ask is, what's your schedule like for you to trade? What days are you willing to trade? And what trading sessions are you available to trade? Next, I want you to figure out what currency pairs you would like to trade and how many setups do you feel comfortable taking per day, right? Your currency pairs might be the same as mine. They might be different. And the setups, you just got to figure out what your risk limit is, right? Because if you're risking 5% on one day, you could divide that in 5 trades, right? You could take 5 setups, and each setup you take is 1% if you lose. You know what I mean? But me, I'm a little bit riskier. I'm trying to, maximize more. So I'm risking a little bit more to gain a little bit more. So just figure that out. Create your trading plan, structure around your schedule. Once you have this, it's going to allow you to move easily and to trade easier once you're looking for setups and you have these rules to follow. So like that, you're just not navigating with no direction, right? So the trading plan is basically like you driving from New York to California with no GPS. You have no plan, you have no direction, you're just going, right? With the trading plan, now you have a sense of direction of where to go, where to exit, where to enter, how many times you're gonna stop and pump for gas. You know what I mean? Stuff like that. Now you have a GPS that's gonna lead you to the destination. That's what a trading plan is.